Old coins remain unchanged, new coins are held tightly. Are Bitcoin's die-hard fans preparing for a big move? Bitcoin is jumping up and down, $3 billion evaporated in an instant? Deleveraging gives the market a cold shower. Trump is staging a shadow change of leadership. How long can Powell remain as the chairman of the Federal Reserve? European enclosure Kraken, a US-listed company, is going big this time. ETFs, stablecoins, and RWAs are all on the scene. Hong Kong aims to be a Web3 on-chain giant. After raising taxes until it's bald, India still wants to set up a Bitcoin piggy bank?
Friday, June 27th, BitcoinTV English channel. Where is the coin chain? I am Michael, and I will first come to the 24-hour data headlines of the Coin Circle. As of June 24th, spot Bitcoin ETF. It has quietly hoarded 1.23 million Bitcoins, accounting for 6.2% of the total market circulation. This is no joke. It is equivalent to sending Bitcoin directly to the obese camp of traditional capital. The total market value of the ETF is now as high as $111.3 billion, and it has earned $77.4 billion on paper, MVRV. The ratio is 1.43, which means that everyone is making money, but it is still far from the peak of huge profits. After all, historically, 3.7 is the peak warning line. ETF. The average purchase cost is about $73,600. If the market falls back in the future, this price will be an important defense line to support the market. The problem is that traditional institutions have always been prudent and want to stop when they make 50 to 75% profit. This is why the price of Bitcoin is always hesitant at key points. BlackRock alone holds nearly 693,000 coins, accounting for ETF. With more than half of the market, it is simply the whale among whales in the Bitcoin world. Overall, ETFs have locked up most of the coins now, and no one will collectively dump the market in the short term, so the medium-term market looks optimistic. But don't forget, once the book profits of ETFs are too exaggerated, there may be a sudden wave of getting off the bus first one day, and then the market will fluctuate greatly in minutes. On-chain data shows that long-term holders, LTH, suddenly exerted their collective strength, and a net increase of 800,000 bitcoins was generated in 30 days, reaching a historical high, just in time for Bitcoin to climb to $100,000. This means that no one wants to sell. It is worth mentioning that the so-called LTH, in fact, should be defined as long-term supply, that is, Bitcoin that has not moved in the past 6 months. This part of assets usually represents the most determined medium and long-term investors. From the distribution of coinage, these new LTH mostly entered the market in the range of 95,000 to 107,000 US, indicating that even around 100,000 US, there are still funds that choose to lock long-term positions. Historically, this kind of LTH surge usually occurs in the accumulation stage or mid-term consolidation period of the bull market, which is exactly the opposite of the crazy cashing out at the top of the market. In other words, the old coins are not moved, and the new coins are not sold. Everyone is holding back and betting on the future. Overall, the market is still full of confidence, and the supply trend of LTH is also becoming an important indicator for judging the sustainability of the market. Since June, the Bitcoin market has been a bit exciting. Although the price fell first, it quickly rebounded to around $107,000. Not much, but the open interest, OI, did not follow suit, falling from $37.8 billion to $32.5 billion. Although it rose slightly back to $34.8 billion, it was still about $3 billion less overall. This shows that on the one hand, people who used high leverage to speculate in cryptocurrencies were swept out by liquidation. On the other hand, some people were worried about the instability of the overall environment, so they simply ran away and took the initiative to reduce their positions to avoid risks. Although this wave of deleveraging has caused a lot of trouble in the market in the short term, in the long run, it is actually making room for the market to come. Because too high leverage is more likely to suppress volatility. Now that the bubble has been cleared and the market is lightly equipped, maybe the next wave of the market will still fly. Unless there is something particularly bad, the market is likely to fluctuate and change hands first, preparing for continued growth in the medium term. Please like and follow us to sort out the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can receive the Member Wealth password from Monday to Friday. Recently, Washington has been very lively. Everyone is saying that Federal Reserve Chairman Jerome Powell may be about to step down. White House spokesman Kush Desai also said that the new Federal Reserve Chairman will take office as early as May next year. If the candidate is announced this summer or autumn, it will be much faster than the usual 3 or 4 months of transition period. At present, the overall performance of the US economy is still stable, but it is still facing the pressure of inflation and high interest rates. If the Fed's policies can be in line with the government, it may form a greater policy synergy. However, at the NATO summit press conference, Trump directly said that he would fire Powell and did not shy away from his intention to interfere with the independence of the Federal Reserve. As for who will take over, it is still confusing, and the relationship between the Federal Reserve and Washington is also tense. It is simply a wonderful political drama.
Rumors that Jerome Powell may step down are rampant, sparking heated discussions in the market about the new chairman of the Federal Reserve. There are 5 candidates with high voices. Kevin Walsh, a former Federal Reserve governor, advocates that policies should be more flexible and criticizes the Federal Reserve for clinging to the model, so he is highly respected on Wall Street. Kevin Hassett, former chairman of the White House Council of Economic Advisors, Scott Bessent, a well-known hedge fund manager, and David Malpass, former World Bank president, have close ties with Trump and are, therefore, nominated. In addition, Christopher Waller, the current Federal Reserve governor, is one of the few candidates who remains neutral in complex situations, so he is considered a compromise candidate.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Trump always likes to play the game of making a feint to the east and attacking to the west. This time, he even made a big fuss about replacing the head of the Federal Reserve. He wants to play the card of the new chairman first, so that his rise to power will not be so bumpy, and also attract everyone's gossip. However, this trick is not so stable. Even if Jerome Powell is really asked to step down, he can still stay in the Federal Reserve Board until 2028, which is equivalent to sitting on the shadow throne for another year and a half. This may make the Federal Reserve full of smoke and miasma. Don't forget that US law only allows the president to nominate a new chairman, but not to directly fire the current one. Trump's early release of information has also been questioned whether he is playing a disguised way of forcing the palace. Exposing personnel movements in advance may make the prospective chairman in a dilemma under the Senate hearing and market attention, and the situation is even more confusing. The EU has been serious about this in the past 2 years. Since the MiCA regulations came into effect last year, major crypto exchanges have been competing for licenses in Europe. Coinbase has already obtained licenses in Germany and Ireland, and HKEX, Bybit, and Crypto.com have also quickly obtained MiCA registrations. Even Gemini was reported to be queuing in Malta. MiCA is equivalent to setting unified rules for the EU crypto community. Anyone who wants to get involved here must first pass the license test. In the latest wave, Kraken announced that it had obtained the MiCA license issued by the Central Bank of Ireland, which means that it can legally expand its presence in 30 European countries. It seems that Europe has really become a new compliance battlefield for the crypto community, and everyone is busy getting a license first, then getting started.
Market for Kraken. We're at such an exciting time for crypto with the implementation of MiCAR, which is what I was discussing there with my panelists. So yeah, really excited to be here, and it went well on stage, I hope.
Kraken, a crypto exchange headquartered in the United States, announced that it has obtained the MiCA license issued by the Central Bank of Ireland, which allows it to provide crypto asset trading, payment, and asset management services in 30 countries in the European Economic Area. This makes Kraken one of the few platforms that has obtained a full EU license. However, not all companies are willing to cooperate with MiCA. Tether stated that it does not intend to apply for MiCA registration for USDT, resulting in Kraken, Crypto.com and other exchanges successively removing USDT from their shelves.
A USDT has been a bit off the chain recently, with its market value shrinking by nearly 3% and more than $4 billion evaporated in an instant. But they didn't want to admit defeat, so they immediately turned around and invested in the Euro stablecoin EURQ of the Dutch blockchain company Quantos Payments, and also invested in the EURR and USDR launched by StableR in Europe, hoping to save the country in a roundabout way and return to the EU market. On the other hand, Kraken was very busy. Europe was desperately trying to stake out territory, and the United States was also not idle. After all, Trump and the SEC have been quite friendly to the crypto industry recently, and the listing of Circle has made exchanges very jealous. So Kraken was slimming down and laying off employees while acquiring derivatives exchanges. The calculation was clear. In the future, we will also step onto the US stock market in an open and above-board manner. After all, who doesn't want to hang their logo on the Nasdaq big screen?
Web3 is so exciting, Hong Kong said. I don't want to act anymore, I want to be a director. Cutting leaks or saving up wealth. India's crypto policy is too divided.
Despite the turbulent times in the cryptocurrency industry over the past 2 years, Hong Kong is truly coming from the wind and going up the chain. Since April 15th last year, the Hong Kong Securities and Futures Commission SFC the approval of the first batch of Bitcoin and Ethereum spot ETFs in Asia not only ignited the bull market in advance, but also allowed Asian investors to rush into the main uptrend of encryption at the first time, and may even promote Hong Kong to occupy a greater initiative and influence in the global digital asset pricing system. In May of this year, the Legislative Council tightened the clockwork again and passed the Stablecoin Regulatory Ordinance, stipulating that all projects that want to issue Hong Kong dollar stablecoins must submit their homework to the HKMA, Alibaba, Standard Chartered, Animoca brands. As soon as they heard the news, they immediately slammed the table and shouted, "We want to get on board too." However, the wind has not stopped yet. In the past 2 days, the Hong Kong government has made another big move, launching the Digital Asset Policy Declaration 2.0 and attaching another leap. The Strategy Framework Gift Package, a full set of combined punches, directly hit the face of the crypto community.
The LEAP strategy is proposed in the Digital Asset Policy Declaration 2.0 of Hong Kong, which comprehensively promotes the construction of the local digital asset ecosystem from the 4 dimensions of law, ecology, application, and talent. From August 1st, a licensing system will be implemented for the issuance of stablecoins. The Hong Kong Securities and Futures Commission will regulate digital asset transactions and custody services. FSTB, the HKMA, will lead the legal review. RWA tokenization and government bonds, ETFs on-chain issuance and tax optimization.
We've been hearing a lot from the industry players. Again, you will talk to the industry leaders across Hong Kong and overseas. Right. They'll tell you that our policymakers and the regulators leaders are very welcoming and open-minded.
In fact, from ETF to stablecoin and then to the Digital Asset Policy Declaration 2.0, the Hong Kong government's operations all have the same core behind them. That is, in the Web3 game, Hong Kong should be the main player, not a spectator. This is a good thing for Hong Kong because Hong Kong has changed from a follower to the top seed player in the Web3 circle in Asia and even the world. With the support of the government, it will also attract more blockchain entrepreneurs, Web3 project parties, and traditional financial institutions to come and make arrangements. In the long run, Hong Kong is likely to occupy a place in the global Web3 pricing power in the future. In short, this is not a simple policy upgrade, but a signal that Hong Kong is really taking the lead in the Web3 track. The next step depends on how the market responds and whether Hong Kong can wear the hat of Asia's number one crypto financial city more steadily and brightly. India's recent attitude towards cryptocurrency policy is confusing. On the one hand, it is desperately increasing taxes, while on the other hand, some people are clamoring to make Bitcoin reserves. What exactly do they want to do? Starting from 2022, crypto assets will be dragged into the pit of virtual digital assets and directly levied a violent tax of 30%. This year is even more outrageous. The budget is here again. Add reports and expand the scope. The most ruthless thing is that from February 1st, you didn't file taxes honestly before? Sorry, check the previous 48 months and cut your tax by up to 70%. This wave of operations has almost made crypto players bald heads, which is really hard to guard against.
Pradeep Bhandari, spokesman for the ruling Bharatiya Janata Party in India, recently suggested launching a Bitcoin reserve pilot. He pointed out that the United States and Bhutan have both deployed crypto strategies, and India, which has abundant renewable energy, should develop a sovereign Bitcoin strategy. He criticized the current policy of only levying taxes but lacking regulation, and believed that clear regulation could promote innovation, protect investors, and enhance economic resilience.
The governor of India's central bank had predicted that crypto will be the reason for the financial meltdown should it not be banned. Governor Shaktikanta Das said, quote, "If you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies."
In the past 2 years, big banks such as Barclays, Citigroup, Goldman Sachs, and JP Morgan Chase, which originally kept a distance from cryptocurrencies, have now rushed into the Bitcoin trading circle, eager to join the excitement of the US stock market. Seeing that the United States is holding on to Bitcoin tightly, India is also a little impatient. But look at India's attitude. It is really awkward. It only knows how to collect 30% tax, but is reluctant to establish a decent rule. Even the Supreme Court is anxious, saying, banning alone is not enough, quickly issue regulations. But the governor of the Reserve Bank of India is not buying it. In June, he directly said that cryptocurrencies are too dangerous and will disrupt financial stability and affect monetary policy. As a result, India has now come out and said that it wants to conduct a Bitcoin reserve pilot. Is this feasible? The spectators are all anxious for them.
Ethereum co-founder Vitalik Buterin posted a picture of German street graffiti on Farcaster with the caption, "Bitcoin, this is our war." Of Russia announced that the country's central bank digital currency, the digital ruble, will be officially launched nationwide on September 1st, 2026. According to the Tron community, the voting request for proposal number 103 was officially passed on June 26, Singapore time. The newly added virtual machine instructions of the Tron mainnet upgrade have been officially enabled, and the consensus layer verification mechanism has been optimized. The official X account of the Chinese crypto media PA News was stolen and published false information about airdrops. Users should not click on related links. NVIDIA to the United States SEC. The filing shows that the company CEO Jensen Huang's 6-moon 20 cumulative reduction since 22.5 10,000 NVIDIA shares, cashing out nearly $3,320 $10,000.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.